Hello and welcome to AE Accounting Tutorials. Today we are continuing our series on IAS 16, Property, Plant and Equipment. In this video, I want us to take a full practice question on PPE schedule. Okay, that is where we'll be required to prepare a PPE schedule to determine the carrying amount of the PPE item or the assets that will be recognized in the statement of financial position. Take note that in this video, I'll be doing giveaway to my subscribers. I'll be giving out free airtime to my subscribers for an internet bundle. So as you keep watching this video, you will see the airtime on the screen and you will use it to do an internet bundle to browse as well. This is a bonus to you for being a subscriber to AE Accounting Tutorials. Thank you very much. So without wasting much time, let's quickly go through the question together and see how we can prepare the PPE schedule. Is that okay? At 1st January 2022, the non-current asset balances of Ankara Limited comprise of the following. We have the original cost, depreciation, and the net, that is the carrying amount or the net book value. So we have three different assets. We have land and building, 296,000 cost, no depreciation charge, 296,000 net. Plant and machinery, 395,200 cost, 238,100 depreciation, 157,100 carrying amount or net book value. Motor vehicles, 32,000 cost, 18,400 depreciation, and 13,600 as the net. The straight line method of depreciation has been in use, and the rates were 10% for plant and machinery and 12.5% for motor vehicles. It is the company's practice to make a full year depreciation charge on new assets in the year of purchase. The following additional information is relevant to the calculation of depreciation for the year ended 31st December 2022. I. A machine bought in March 2018 for 84,000 Ghana cedis is now recognized to have a useful life of at least another 16 years. II. It has been decided to charge depreciation on building at 2% per annum. The building represents 180,000 of the 296,000 shown above and were all completed in February 2009. III. A vehicle purchased in July 2019 for 4,000 cedis was traded in at a value of 1,800 Ghana cedis in part exchange for a new vehicle costing 6,400. IV. Included in the plant and machinery is an item which originally cost 72,000 cedis and which is already fully depreciated but not expected to last for very much longer. Otherwise, all items of machinery are less than 10 years old and all vehicles less than 8 years old. VIN. For consistency and uniformity, all amounts prior to the redenomination of the cedi have been converted to the Ghana cedis. Required. Prepare a schedule of PPE and balances suitable for inclusion in the company's published account for the year ended 31st December 2022. Include a clear indication of the amount to be charged against the year's profits and balances to be shown in the statement of financial position. Alright, so we are being asked to prepare a PPE schedule. Is that okay? We are preparing this PPE schedule in accordance with IAS 16, Property, Plant and Equipment. And they are requiring for two requirements, okay? So they said we should calculate for the amount that will be charged against profits. That is the total annual depreciation charge for the assets. And we should also calculate the carrying amount of the assets that will be recognized in the statement of financial position. So after preparing our PPE schedule, these two figures will be ascertained. Is that okay? I believe after going through all this complex question, any PPE questions you may meet in your exams or anywhere, you should be able to solve it. Before we begin with the solution, I would like us to go through the footnote again or the additional information again to analyze these transactions very well before we begin with the solution. So they said that the straight line method of depreciation is being used, meaning we are applying depreciation on the cost of the assets, not the net book value. And they have given us the rate of depreciation for the assets. Okay, and they also say that it is the policy of the company to charge depreciation at the year of acquisition of any asset. Is that okay? The first additional information is that a machine bought in March 2018 for 84,000 cedis is now recognized to have a useful life of another 16 years. All right. This simply means that at the beginning of 2022, a value of 84,000 of machine is now recognized to have another useful life. It means that when we are to calculate depreciation of this asset, we bought the assets in 2018. So from 2018 to the beginning of 2022, we apply the rate. But after that, we use the useful life to determine the rest of the depreciation. So that is the meaning of this footnote. Is that okay? So the second one, that is II, says that it has been decided to charge depreciation on building at 2% per annum. The building represents 180,000 of the 260,000 cities shown above, and were all completed in February 2009. Initially, land and building, there is no depreciation charge for that. But at the beginning of 2022, it is the company has realized to, or the company has decided to charge depreciation on building. Okay, that is 2%. But out of the total amount of the land and building represents 180,000. So we only calculate the 2% on the 180,000. And this building is being completed in February 2009. So when we are determining the depreciation, we will consider the prior year adjustment or the prior year depreciation, okay? Because initially there was no depreciation rates, and now they've introduced it. This means an introduction of accounting policy, and this is regulated by the IAS 8, okay? So it means that the depreciation here will take a retrospective effect, okay? Retrospective effect. Retrospective effect, meaning that when we are determining the depreciation, according to IAS 8, we will consider the prior year depreciation. That is, we will consider the year the building is being completed. Is that okay? So when we get there, you will see what we are actually talking about. So the next additional information is a vehicle purchased in July 2019 for 4,000 cedis was traded in at a value of 1,800 in part exchange for a new vehicle costing 6,400. This simply means that a machine bought in July 2019 has been disposed of, okay, and the cost is 4,000 cedis, and a new machine has been also acquired, okay, that is 6,400. Very good. So the next additional information is that included in the plants and machinery is an item which originally cost 72,000 and which is already fully depreciated but not expected to last for very much longer. Is that okay? So this means that a cost of 72,000 included in the plant and machinery has already been depreciated, so we won't depreciate it. Is that okay? Very good. So I believe that is all the relevant additional information we need to analyze. Okay, so with this we can begin with our solution. So with the PPE schedule, we have three different assets. Okay, so we have land and building, we have plants and machinery, we have motor vehicles. Then we consider the totals as well. Is that okay? And the currency sign is Ghana cedis. So to begin with the PP schedule, okay, what we do is that we begin with the cost components and determine the cost components. Okay, after that, then we look at the depreciation. Okay, then we take out the depreciation from the cost to arrive at our carrying amount. Okay, so under the cost, first of all, we will be talking about cost. So under the cost, we have three things to talk about. Is that okay? We talked about the opening balance of the assets. We also consider if there is any acquisition and if there is any disposal and revaluation. So these are the three things we look at. So we look at balance, okay? So balance asset, that is 1st of January 2022, okay? So for building, from the question, we have 296,000, okay? And for plant and machinery, it is 395,200. Is that okay? From the same question, we have motor vehicle of an amount of 3,200, 32,000 rather. So this becomes the opening balances of these assets, okay? These three assets from the question. Then we add it to arrive at 723,200 being the total. Is that okay? Very good. So after recording the opening balance or the balance at start, the first question we ask ourselves, is there any acquisition, is there any disposal, and is there any revaluation? So from this question, there is no revaluation. So we consider disposal and acquisition. So from additional information, III, it says that a vehicle purchased in July 2019 for 4,000 cedis was traded in at a value of 1,800 in part exchange for a new vehicle costing for 6,400. So it means that we acquired an asset. There was an acquisition of an amount of 6,400. So we record the acquisition. And we acquired a vehicle, okay, of an amount of 6,400. So we didn't make acquisition of this. So the total is 6,400. Very good. Then we consider the disposal. So we add acquisition and subtract disposal. So there is also a disposal of an amount of 4,000. So the disposed asset, we consider the cost, not the proceed or the amount we sold the asset, because we are under cost, okay? So the cost is 4,000, but the amount we dispose of the asset is 1,800. We are not interested in the selling price, rather the cost of the asset. So the cost is what? 4,000 cedis. So this is disposal, so we subtract 4,000 cedis. Is that okay? Because there is no revaluation in this question, we can do the addition and subtraction to arrive at the closing balance of this asset. Okay, so and this will remain the same of 296,000. This will be the same of 395,200. Okay, and this will be 34,400. That is when we add this to this and subtract this, and this will give us 725,600. We add this to and subtract this. Okay, so this becomes the closing balance of the asset. So that is balance asset, that is 31st December 2022. Is that okay? So after looking at the costs of the asset, then we consider the depreciation. Okay, so we have something we call depreciation. With the depreciation, we begin with the opening balance of the depreciation, that is the accumulated depreciation. Okay, so we have balance as at 1st January 2022. Is that okay? So with the opening balances, okay, from the question we have no depreciation for land and building initially, so we have no depreciation. But for plant and machinery, we have 238,100. So 238,100 being the accumulated depreciation. That is the opening balance. Okay. For motor vehicle, we have 18,400. So this will give, when we add these two, it will give us a total of 256,500 being the total of these two. So this is the opening balance of the depreciation. Okay, take note that under the depreciation, okay, the items we need to talk about is the opening balance. After that, then we consider the annual depreciation charge. And if there is any disposed asset, we calculate its accumulated depreciation and subtract it from the depreciation as we subtracted the cost of the disposed assets. Is that okay? And after that, if there is any prior year adjustments, we also calculate such depreciation and add it. So we look at the annual depreciation charge. Annual depreciation charge. Okay, so they've given us rates for depreciation. Is that okay? But remember that the additional information II says that it has been decided to charge 2% of depreciation on building. Okay, and the total cost of land and building is 296,000, but they say building represents 180,000. So we apply the 2% on the building. So we come. So calculation or workings. So we have building. The building represents 180,000 and we are applying 2% on the 180,000. Okay, and this will give us 3,600 as the annual depreciation for building. So we come and write the 3,600 as the annual depreciation for building. Okay, but there is a prior adjustment for this building because the building was completed in February 2009. So we will also consider the prior adjustment. Is that okay? So after that, let's look at the annual depreciation charge for plant and machinery. So pay attention to the calculation of the annual depreciation. It is quite tricky, so you pay attention. Is that okay? So we also talk about, I'll leave a space here to determine the prior year adjustments. But before that, let me look at the plant and machinery depreciation. Under plant and machinery, the cost of plant and machinery, the closing balance is 395,200. So the balance is 395,200. Okay, but remember that the first additional information says that machine bought in March 2018 for 84,000 is now recognized to have a useful life of at least another 16 years. It means that we won't just apply the rate on this 84,000. We will apply the rate on the 84,000 from 2018 to the beginning of 2022. Then within 2022, we use the estimated useful life. Is that okay? So let's subtract that from here and calculate each depreciation separately. So we have 84,000 we are subtracting, okay? Then the additional information, IVOS says that included in the plant and machinery is an item which originally cost 72,000 and which is already fully depreciated. It has been depreciated already, so let's subtract it off. So that is 72,000. So as for this, we will not come back to its depreciation. We only come and consider this because this has been fully depreciated already. So the balance will give us 239,200. That is when we subtract these two from the opening balance. Is that okay? So now this we can apply the rate. That is 10% on the balance. Okay. So we have 10% on this. So when we apply 10%, we will get an amount of 23,920, all are in Ghana cedis. Is that okay? So this is the annual depreciation charge for the remaining balance. Okay, so after this, let's consider the depreciation charge for this. Is that okay? So the depreciation charge for this is also 10%. So we calculate 10% on the 84,000, and this will give us 8,400. So from 2018 to 2022, okay, so 2018 2022, that is at the beginning of 2022, 1st January 2022, so that is 4 years. Okay, so to determine the accumulated depreciation, we multiply it by 4 years. So 4 years, and this will give us 33,600 as the accumulated depreciation. Is that okay? Very good. Now we've gotten the accumulated depreciation for this. So let's subtract the accumulated depreciation from the cost to arrive at the carrying amount of this asset. Then we apply the useful life, okay, to determine the annual depreciation charge for 2022. All right. So to do this, we subtract the accumulated depreciation from the 84,000 minus the 33,600, and this will give us 50,400. So for this, that is the balance as at 1st January 2022, and we can now use the estimated useful life to determine its annual depreciation charge, and that is 16 years. Is that okay? So with this, we will get an amount of 3,150 as the annual depreciation charge for 2022. Is that okay? That is for 2022. Is that okay? But this accumulated depreciation is from 2018 to 2022, but our calculation is for 2022. So the PPE scale is for December 31st December 2022. Is that okay? So this is the annual depreciation charge for the 8,400. We add this to the annual depreciation charge for this. Is that okay? So we add the two, we add this 23,920 plus this, that is 3,150. Okay, these two annual depreciation charge will give us 227,070. So this will become the annual depreciation charge for plant and machinery. So you can go over and see how this calculation is being done. Okay, it is a bit tricky. So we can write the annual depreciation charge as 27,070. So after determining the annual depreciation charge for plant and machinery, let's also consider the annual depreciation charge for motor vehicle. Is that okay? For motor vehicle, it is 12.5%. So we apply the 12.5% on the balance, okay, the cost. Okay, so that is 12 0.5% on 34,400. Is that okay? And this will give us an amount of 4,300. Okay, as the annual depreciation charge for motor vehicles. It is straightforward. Okay, so we apply and then get 4,300 as the annual depreciation charge. So we write the 4,300. So 4,300. So let me clean this portion. Okay, so that we can work the remaining. So the total of these three will give us 34,970 as the total annual depreciation charge. So after looking at the annual depreciation charge, let's consider the disposal. That is the accumulated depreciation of the disposed assets. Is that okay? So we dispose of motor vehicle, okay, disposal 4,000, okay, and motor vehicle, the rate is 12.5%. So 12.5% on the disposed asset, 4,000, okay, and this gives us 500 Ghana cedis. But remember that this asset was acquired in July 2019 and it was disposed on 1st January 2022. That is a period of 3 good years. So this is the annual depreciation charge. So to determine the accumulated depreciation charge, we multiply the annual depreciation charge by the 3 years, because it is in the business for 3 good years. Okay, and this will give us 1,500 Ghana cedis as the accumulated depreciation for the disposed assets. So there is no accumulated depreciation for this. We have 1,500 for this. So as we are subtracting the cost of the disposed assets, we also subtract the accumulated depreciation of the disposed assets. So the last thing to talk about is the prior year adjustment. Okay, so we talk about prior year adjustment. Okay, so remember that there is a prior year adjustment on building. Okay, building was completed in 2009. Okay, February 2009, and we are in 2022. That is a period of 13 good years. Okay, that is 1st January from 2009 to 1st January 2022 is a period of 13 years. Okay, so we need to calculate the depreciation for this period and include it as part of the depreciation, because this is an introduction of an accounting policy. And I told you that according to IAS 8, when there is an introduction of an accounting policy, it takes what we call retrospective effect. Retrospective effect, meaning that we will calculate the depreciation from the time the asset was acquired or completed, okay, and include it. And the asset was completed in 2009, and we are preparing for 2022, and we've already calculated the annual depreciation charge for 2022. So we want the depreciation charge from 2009 to 2021 end. Okay, so to get that, it is very simple. As we are able to determine the number of years, the annual depreciation charge is 3,600. Is that not it? 3,600. Then we multiply by the 13 years. The 13 years. Is that okay? And this will give us 46,800. So this will be the prior year adjustment, 46,800. So we consider the prior year adjustment for building That is 46,800. And there is no prior adjustment for the rest of the assets. So we have 46,800. So what we need to do now is that we add the depreciation, then the closing depreciation, or the depreciation at the close of the period will be subtracted from the cost at the close of the period. Is that okay? So where there is subtraction, we also subtract as such. So we do the addition and the subtraction. So this will give us 50,400. Okay, when we add this and this, so we also add these two amounts. Is that okay? So when we add these two amounts, it will give us an amount of 256,170. 256,170. When we add this two, then we add this to this and subtract this. Is that okay? And this will give us an amount of 21,200. When we add these two and subtract this, is that okay? So we can add these two and subtract this. We can add this and subtract this and record it here, or add this three and then record it here. Is this clear? So when we do that, we will get an amount of 336,770 as the total balance as at 31st December 2022. Is that okay? So after getting the closing depreciation, we subtract this closing depreciation from the closing cost of the asset to get the carrying amount. So to do that, we subtract this from this. Okay, so let's say this is A and this is B. So and this will be A minus B. Is that okay? So when we subtract this from this, we will get 245,600. When we subtract this 2, we will get 130,030. Is that okay? And this will also give us an amount of 13,200. That is where we subtract this from this. Is that okay? After that, we can also subtract this from this or add this 3. Is that okay? And this will give us 388,830. So this is the carrying amount. This is the carrying amount, okay, of the PPE item. So the requirement says that we should determine the amount that will be charged to the statement of profit or loss. So that will be the total depreciation, okay? The total depreciation charge will be charged to the statement of profit or loss as an expense, okay? And they say we should calculate the amount that will be charged to or recognized in the statement of financial position. So that will be the total carrying amount. So this is the carrying amount. We add these 3 carrying amounts, and this figure will be recognized. This amount will be recognized in the statement of financial position as the carrying amount of the PPE. So this brings us to an end of this video. Is that okay? So in our next video, we may look at another topic. Is that okay? So if you are new to this channel, I will encourage you to subscribe to this channel. Okay, turn on the notification bell so that any moment I uploaded a new video, you will actually get notified.